Welcome to the REI Diamonds Show with Dan Breslin, your source for real estate investment jewels of wisdom.
Welcome to the REI Diamond Show with Matty A on flipping 30 houses per year. I'm Dan Breslin, host of the REI Diamond Show, and today's guest is Matty A, also known as Matt Aitchison of the Millionaire Mindcast podcast show. Matt is a full-time real estate investor from Northern California and currently buys, renovates, and sells about 30 houses per year. In this episode, we have buried an absolute gem regarding a solid source of deals, which will be infinitely valuable to both real estate fix and flip investors as well as real estate agents. We are going to cover that gem along with a few others, so grab a pen, pad, and a seat, and we will get moving. Matty A, welcome to the show.
What's going on, Dan? It's a pleasure to be here, brother.
Chilling, man. I really appreciate you taking time out, closing the door for the distractions, and being here with the listeners. Thank you.
It's an honor to be on the show. I'm excited to connect with you and your community.
Cool. So for anybody who's listening who doesn't already know who Matty A is, can you give the Reader's Digest version of, how you started real estate and what your business looks like today?
Yeah. So I am a millennial real estate investor. I've been investing right out of college. 28 now, so I've been investing for about 6 years, full-time, nonstop. That is my one thing, my focus, my passion. And I have a fix and flip business where we flip houses. On a good year, I've done north of 30. We are in Sacramento, California, in Northern California. So we're in a very, I would say, solid market, highly competitive market, which adds, some different variables to the equation. And I also am a partner in a construction business and had recently just sold out my shares in a real estate business that was, ranked top 1,000 by Wall Street Journal in the country. And I did that in order to focus full-time on building my rental portfolio within my company and also continuing to scale our flipping business and our real estate flipping mastermind that we have going on with students around the country.
Are you allowed to share that, or is there like a non-disclosure of what company that was?
No, I've openly talked about the split of the partnership. So that's really where I got my start. Was I was getting my real estate license at a small little boutique office here in Sacramento. And while I was studying and going to the classes every day, and, I was fresh out of college, so I was 21, just turned 22, I think, and I was learning to become a salesperson, and I wanted to be in real estate. And I met another gal who was running the office for this real estate brokerage that we were getting licensed through. And I realized she was, super personable. She had, her master's degree and her bachelor's degree in business and economics. And she was just sitting behind this desk making $13 an hour. And I was like, what are you doing? Let's, get into real estate and let's see if this might be something where we can partner up. And so long story short, 4 years later, we were doing about 40 million in volume and had a team of, I would say anywhere, it fluctuated, but we'd say 10 to 12 people. And, we were ranked by Wall Street Journal top 1,000 real estate teams in the country. And I just realized that I was not passionate about retail real estate. I love being able to send over a lot of my retail leads and have, a leg to my business that is able to service those clients' needs, that it doesn't work for me to buy their house for cash or to, renegotiate some creative options for their property with them. If they wanted to sell for highest and best on the retail market, it was always a great leg of my business to be able to funnel them over there and still generate some kind of income off that, which I'm still doing. The partnership just grew in different directions, and we're still rooting each other on. I'm really proud of how we handled the splitting of that partnership and that business, being that it was somewhat both of our babies, and we had a lot of time and energy and blood, sweat, and tears invested into it. But it was just one of those times where the expiration on that relationship in a business capacity was at a point where we were going different directions, and we decided to, make some changes.
Yeah, and that's a story I hear a lot, here in show, in our networking event, just in the real estate investor community in general. I hear a lot of people approach me who are real estate agents and doing some portion of their business is retail, perhaps some portion of their business dealing with investors. And they'll say things like this, Matty, and you probably can relate to me. Oh, yeah, I want to be, I want to get into the investment side. I want to be into that side of the business. And so I think there's like a certain pull, and you made the leap. Would you describe that, if you were being completely candid, as like, the money and the rewards weren't quite big enough when you did all that work for the retail? Was it just that certain people are suited more for showing buyers and dealing with that stuff? I mean, if you're being completely honest, what kind of led you to make that decision fully that you'd rather be on the investment side of the business as opposed to the retail real estate side?
Well, when I was in the real estate business, to clarify what my role was, is I was running our investment division. So when Rachel and I got started, we were both doing the same thing. We were working with buyers, working with sellers, essentially anything under the sun, right, that would bring in an income. Being that we were dead broke was what we were doing. Just like any startup business, you're wearing multiple hats, doing whatever the heck needs to get done. As we started to generate more income and start seeing where each other's strengths were and seeing where our passions lie, I was extremely passionate about real estate investing, and I had been working with a handful of flippers. I was consulting and wholesaling to a handful of hedge funds, being that our market was a heavily distressed market, that, the Blackstones and the Waypoints and the U.S. Homes and some of the large, big hedge funds were playing in our market. I was heavily invested in the day-to-day of dealing with investors, and myself wanting to be an investor, doing that as well. And she was, all about kissing babies, shaking hands, helping people find their dream house, helping people sell their house for top dollar, which was great. So we had built this team up over that time frame in those two separate capacities. Well, in the meantime, I was also building up my real estate flipping business. I had joined and partnered up with a couple other people in regards to a construction company. And over that time, I'd start realizing that based on my time, my input, and my energy, my fulfillment, my happiness, and also my income and the output, all of those, first mentioned variables brought for me on my profit and loss statement. My time in versus my income out was almost like 4 or 5 times what I was making in the retail business. So it became a point where I was spending too much time in the retail business and that company and making a fraction of what I was making on the investment business with the, amount of time that I was putting in there. So I had to really get honest with myself of, 1, where was I most passionate about? 2, what did I, enjoy and love doing the most? And 3, financially, just what made the most sense. And so that's what led me to going in this direction full time this year.
That's cool. It's important for anybody. I mean, in the beginning, the same way you mentioned the progression of realizing how valuable time is. That's really cool. I think a lot of people, it's hard to do that. I mean, in the beginning, you're trying to pay your bills. You don't care what comes down the pike. You're just willing to do
Right.
it. But you certainly, as time comes on, you suddenly, people will hear me say that. Well, how much time did you invest in that? And they're like, wait a minute, did he just say invest time? And yeah, absolutely. I'm looking for a return on my time investment, no matter what it is I'm doing, whether I'm, writing a business plan, whether I'm, negotiating a deal. Like, what is my return on this time that I'm investing in? Reading a book, listening to a podcast, hosting a podcast, whatever it is. I'm always cognizant that, like everyone who's alive right now, there's an expiration date on everybody's time at some point in the future. And so it is very valuable, and we want to make sure we do the right thing with it. So, Matt, you said about 30 houses or so in a good year. How many houses do you have right now in some various stage of progression? Give us like a snapshot of what's going on right now in the investment business for you.
Yeah, so, right now I'm in the process of refining 10 rental properties to get better terms on those individual houses, which will kick up my monthly cash flow significantly. We'll get to refi out all of our investors that have notes on those properties. That's a solid project that the staff is focusing on right now. And then we have about 6 or 7 flips in some capacity that are either on the market, close to being on the market, or just purchased or past contingency stage where we're moving to close. So we're off to a good start for this year, which I'm happy about. And it's always good to keep my, private lenders' money deployed and growing. And essentially that keeps them happy. It keeps me in a space that I'm allowed to, keep looking for deals and closing deals. And the goal this year is I want to do a consistent 30, being that I still want to make sure that I'm practicing everything that I preach to my mastermind group and my community and all of the, coaching and training that I do around the country. I want to make sure that I'm still implementing, being that flipping is my bread and butter. It's my, cash machine that allows me to go out and buy passive income opportunities like rentals or to invest in other businesses. So we're hitting the pavement hard this first quarter to make sure that we're starting out 2017 with a bang.
So how many deals does that equal to feed this pipeline, keep this machine cooking? You got private investors, you got the construction component. So is this a deal a week, a deal every 10 days? How many deals do you need to keep plugging into this machine?
Yeah, essentially I need about 3 deals a month, ideally, a little under 3 deals a month. So if we are able to keep that momentum rolling with 3 a month, we'll break that. We'll break that goal for sure. And the goal for me is to keep growing my rental portfolio in the process, because I want to have I want to have $100,000 a month passive income coming in by the time that I'm 50.
Out of the 3 deals per month, what is the usual or average ARV, or do you have a target ARV that you feel safe in, a certain price point that you like to play?
Yeah, so my model right now, and this is the thing about real estate flipping, is your model is going to shift. I've had many different models based on where the market's at, based on some of the restrictions, based on, many different variables. My model right now being that I personally feel we're at a peak in the market, or we're at least definitely on a high end of the market. If we're looking at, your traditional real estate cycles going anywhere from 7 to 10 years, from peak to valley, or, high to low, we're definitely, since the 2008 crash, at a peak again. And so, with the market being what it is, and me not having the crystal ball to say, you know what, we're going to be riding this up for a while longer, which we absolutely could be. I don't know. But I want to be in a model that allows me to be in and out. So obviously in your capacity and what you guys focus on, wholesaling, that gives you the ability to minimize a lot of liability and also to shorten the time frame that you're involved with some of those kind of deals. So in a flipping capacity, I'm also looking at every opportunity with that same mentality, is how can I be in and out of this as quick as possible? So all of the properties that I'm currently doing right now, all the projects that I'm looking at, they're in and out type projects. So I want to be from purchase to rehab to relist to close anywhere from, let's say, realistically, about 120 days. So 120 days, I'd like to say 90 to 120 days is kind of my model right now. And so, in the higher end price points, with days on market being higher, less demand in those markets, I try and stay in the lower end price points, which for our market is about, I would say 250,000 and under. Our average median home sale in Sacramento or the Tri-Counties area, which is a couple different counties in the surrounding area, we're right around 289. So anything under that, 250 to 300 price point, I like to stay in, because I know we have our highest demand in those markets. We have low supply, high demand, low days on market, which essentially allows me to have a pretty good grasp on what's going on in my market. And if something were to shift, being that, most real estate professionals or investors that are in the game consistently, we're getting wind and we have a pulse on the market generally about 6 months ahead of what the general public and when they get wind of it. So that allows me, if I feel like something is shifting, I'm in a space that allows me to make some changes in my business quickly in order to get out, get safe, and then figure out where the market's going to go next. and, recap and redeploy. But without that, that model, if I were going and doing ground up projects that are 12 months and the market shifts and, starts changing 3% every month over, a 6-month time frame, that could be my whole profit for one individual project. So right now, until I have a good idea of where the market's going to be at, I'm just trying to keep it safe and consistent, churn and burn, in and out kind of projects.
Yeah, and ironically, that's just about the same business model for our flips that we actually focus on in the Philadelphia market, is that $300,000 sweet spot to me. And I think I mentioned it when I was on your show, but forgot, the important point. When you get into that higher price point, Matt, if someone's buying with a mortgage, a half a point, 3/4 of a point, a whole point, that's going to drastically affect the monthly payment, and it's going to eat away from, if you're talking about $600,000, $700,000, $800,000 house, you're talking about maybe losing $40,000, $50,000, $60,000, $70,000 in buying power because of the interest rates that are hiking. So we're seeing a lot of that interest rate hike on the market. And at least in our opinion, we calculate the risk to be slightly less when you're dealing with interest rate hikes. It is going to affect buying power, but in our opinion, and we're willing to bet on the houses that we flip, that $250,000, $289,000, $300,000 house isn't going to be impacted quite as heavily as a house that's double that price as interest rates are going up. So yeah, that's a great model. Well articulated, your reasoning for being in that model. 6 months ahead, you mentioned, is what the real estate investors, many of us, would see. Have you seen anything in numbers, statistics, market data, what have you, that is leading you to have changed your business model? And what would those things be?
Not right now. I look at things on a macro and a micro level. Most importantly, I'm very in tune with what's going on in my market, being that I've got a lot of contacts in the, retail space with your traditional sales agents. I'm constantly asking them what they're seeing, what they're feeling, getting a pulse on that. I'm also plugged into a lot of different real estate investment communities and associations and individuals. So I'm always keeping a pulse on not only what the data is saying, but also what individuals in the market are feeling and seeing, just to check, my own sensors to make sure that I'm on the right track. But in regards to what I look for is when I'm tracking my monthly, basically, data, I'm looking at a handful of things. I'm looking at price per square foot in the areas and in the price points that I'm generally moving inventory in. So I'm looking at, is price per square foot going up, going down? I'm looking at the absorption rate of how many houses, based on the ones that go for sale and the ones that actually go pending into contract and sold, what that absorption rate is looking like. I'm also looking at, which is essentially, in my opinion, the biggest, key operating metric that I pay attention to, is inventory. Because a lot of people are saying, interest rates are going to go up and people are, some people are going to drop out of the market. And I completely agree with some of that thinking. But at the end of the day, if there is no supply and there's no inventory available, and especially if it's well below the absorption rate, then we're going to still continue to see prices hold strong. So if every single individual decided to leave the market tomorrow, then that would be an issue. But there's always going to be some kind of demand for housing. And those will be the more qualified individuals. And unless a spike in inventory goes up and they have more options and more things to choose from, which would require me to put out a better product or to continue to incentivize them to buy my product, I'm still going to have the ability to demand a consistent, solid market price without having to concede on price or in other areas of my model, because the inventory just isn't available. They don't have much to choose from. So I'm a big believer in inventory drives pricing. And, with the whole supply and demand curve, taking those things into account, inventory tied in with absorption rate are two of the big factors that I'm consistently looking at.
Now, supply, and I'm going to go in a little bit of a different direction, not quite the market data supply, but the supply for your pipeline of fix and flip deals. How do you find your deals? What percentage is coming from what source? maybe just touch on how Matt finds real estate deals, negotiates real estate deals for the fix and flip machine.
Yeah, so the last few deals that I've run into have all been from my bird doggers or my agent network. And I am constantly posting videos on Facebook. I'm doing project walkthroughs. I'm meeting with contractors, before and after photos. So I'm constantly putting out into this public eye that I am a real estate investor, that I'm a flipper. I'm constantly looking for deals. And so I get a lot of people that go, hey, I know you do flips. Would this work for you? Or agents, know that I'm always looking, and they would get to represent me on the buy side and get to relist the property. So they're bringing deals. So I'm a big believer in building out your army of bird doggers and the people that bring you deals. That's been a great one for me. Direct mail, I know you guys do a very consistent and large amount of direct mail, which has always been a bread and butter for me. I don't care what anybody says. Direct mail is not dead. It's not going away anytime soon. And I use that as one of my biggest and most consistent lead generation, opportunities for finding deals. I also do pay-per-click and have some websites out there that generate some leads for us. And then we've, done the standard, bought one from a wholesaler here and there. We've done bandit signs, but I would say my three main focuses are agent, direct mail, and obviously the bird doggers are a big one as well. And then my pay-per-click.
Let's talk about the agent. I mean, if that's genuinely number one, and I think it probably could be, and you're leveraging yourself and creating a certain image of, hey, I'm actually doing the rehab. So, the problem with the letters, a lot of the people out there is they're actually wholesaling. Like when wholesalers are posting all over Facebook about hey, we buy houses, it's kind of like, well, the agents who have the pocket listing that belongs with a flipper, they've kind of sniffed out the fact that whoever it is who's a wholesaler looking to buy property, they never posted the pictures with the contractor. They never posted the before and afters. They never posted any of that stuff. So they're not feeling super confident in getting a hold of that person who's actually a wholesaler on Facebook. So you've really, it sounds like, leveraged that up and done that intentionally. How many deals have you gotten? Or better question, how many offers do you end up having to make on those agent referrals? Are you getting 1 in 3 of those type of referrals under contract buying them? Is it more like 1 in 10, or is it just like the MLS? We have to look at 100 of these things to get one, under contract.
No, I would say my conversion from the direct agent referrals is much, much higher because they're essentially the gatekeeper to that seller. So most of these agents are actually thinking about listing the property, and they are, trying to present with their owner, if it's a distressed situation or distressed property, the options for that individual. And so what I do is I take the time to coach those agents on how to communicate with these sellers of their options in addition to just listing the property on the market. So that's been a really big piece, I would say, is it has taken some time and it's developed over the years, but I want to equip those agents with the necessary scripts and the confidence to go in there when they're, having that conversation with one of their sellers and say, if you don't want to put it on the retail market and have people come in and out of the house and, negotiate closing costs and repairs and all of that, and you just want to get a quick cash offer. And what I do is I say, and I coach them to say that, you won't have to pay me a real estate commission. You won't have to pay any of the closing costs. They'll buy the property as is, and they'll close as fast as you want to or on your timeline. And I let the agent know, hey, I'm going to take care of your commission on my end. Don't worry about that. But if you communicate that to them, that gives the agent a lot more incentive to go, man, I'm going to get paid in 7 days or less. I'm not going to have to list the property, put, photos. I'm not going to have to do an open house. I'm going to get paid, and I'm going to get to relist the property on the back end as well. Man, that sounds like a good deal. And so they go into their listing opportunity and conversation fighting for my deal to bring me an opportunity instead of just going in with a one-sided mindset of I'm just going to list the property and put it on the market. So that's been a big, game changer, is equipping them with the necessary skills and scripts to go in there and at least present their seller with a couple different options, because who doesn't like options, right? If you just go in there and you try and close them for a listing, that's one thing. But if you can go in there and go, hey, here's this option, but here is also another door that we could walk through together, and here's what that might look like. sellers love that, and it's also a great differentiator for that agent. Now I just added value to that agent, that individual, on how to potentially create another revenue income stream for themselves, and they're grateful for that, and that obviously has built a great relationship with a lot of the people who consistently bring me deals.
Yeah, I mean, the bottom line, Matt, is that the seller doesn't want a list of property. A lot of people think, oh, the seller wants to get all the money they can out of the property. The real thing that most sellers actually want is they want a buyer to pay a fair price and close and get it all done and over with quickly. You know, I relate this similarly emotionally to, you know, the feeling you have when you're buying a car and they go outside to kind of like inspect the trade-in. You sort of just want it all to end real quick, and you feel great when it's all said and done and you get your new car. But there's like, you know, for a lot of people who have not been in the situation of a seller selling a house that was, you know, their grandmom's or their parents' house or whatever, and they're just trying to get the deal done, they kind of just want it to be over with. They're not professional real estate investors. They're not like out to, you know, bull stuff. And there's a few who like want to hold, you know, an auction and try to drive every last penny out of it. But I found that a lot of times the best fit is the ones who are people like you just described. I mean, they just kind of want this thing to end relatively quickly. So, you know, bullet points here, you know, in the action item, you're developing this agent referral source over time with social media, pictures, et cetera. You're offering that agent to go back and say, hey, no commission, I'm going to also allow you to relist the property. So you kind of let them double dip on that and, you know, provide a great opportunity for them. And then you also paint a picture in a fantastic method for the seller, because now the agent's not coming back and saying, hey, I got a buyer for this property, and then they're kind of like looking at them to get the commission out of there. But instead they go back and say, hey, this is a friend of mine, and, you know, he's willing to just buy it, and he's even going to pay my commission separate. It's like it's going to come out of your part. And so it just sounds like, you know, music to the ears of the seller when it's presented in that fashion. That's solid information, Matt. How many or how often are you posting on social media? Is this an everyday thing, 3 times a day, 3 times a week?
Yeah, it's an everyday thing for me. I have a couple different platforms that I'm doing it on, but essentially you are creating a brand for yourself, you know, and so I want people to think of me. My personal brand is wealth building through real estate. So people know that I'm a real estate investor. I'm constantly investing in real estate. I'm in the game on a daily basis. And then also, you know, I'm positive. I'm consistently putting out positive messages, whether that's quotes or interviews or whatever it may be. So when you are trying to develop a brand, if you want to be known as Philadelphia's best wholesaler, then that's what you talk about. That's what you do. That's what you put out. That's, you know, whether that's a deal case study or a testimonial from someone you wholesaled a property to, or when you're walking a property, right? You constantly want to be making deposits in the world, especially in social media world, where people are able to understand what it is that you do and who you are by putting out that consistent content. So I post on Facebook at least once a day, and not all of it is real estate related, but at the same time, it's either in line with my brand. So it's either family, it's fun, it's positive, or it's real estate investing.
So you also have the Millionaire Mindcast podcast show, which is incredible. It is one of the few real estate podcasts that I check out, obviously, because I'm doing my own. I check mine out. But I really enjoy your presentation there, and you do a great job of extracting valuable information from people on your show, which is something people have said the same thing to me. And I think that it's a perspective that you bring that I do my best to bring here on this show. And that's like coming from the place of my primary income is coming from like actually doing real estate deals, which is exactly what you had mentioned earlier on our show. So You have this incredible experience on that show. And I'm going to ask you a little bit of a different question here, you know, from our normal questions we ask. What would be maybe the top 2 or 3 revelations, tips, things that you picked up from guests, and you can maybe even mention a few of the guests who you've gotten them from if you'd like to give them credit, that have helped you to build, explode, or grow your business, Matt?
Yeah, well, I recently just did a show with a young guy named Mark Black, and one of the things that he talked about was this idea of excuses that individuals tell themselves, you know, I don't have enough resources or enough connections or network or the knowledge or this or that. And essentially he just called BS on it and said that we all have the knowledge and resources and tools around us. It's just us in our mind and the neuroscience behind it of actually making the decision and the choice to say that we're going to go out and create it or extract it or to do it. So that was a great one. Also, I mean, I've had some amazing guests on the show that are constantly dropping knowledge. One was David Osborne, who, you know, is north of $100 million, has a great empire that he has built. And one of the best things that he talked about was, you know, as entrepreneurs or as business owners, we often get distracted. We often have new ideas and new things that we constantly want to get implemented. And, you know, he was speaking to me at this point in time, and he just said, you know, you like having babies. Essentially, he was relating babies to ideas. He goes, you like having babies, but you don't always like raising them. And he goes, if you're going to scale your business and you're going to take it to the next level, you either need to focus on raising those babies or raising one baby, go deep, not wide, you know. And then also he said, if that's not going to be you, you're not going to be the one to go deep, then go deep on that particular thing and take it across the finish line. Then you need a nanny. You need to have an integrator in your life, someone that you can give that project, give that idea to, hand it off, and actually let them take it across the finish line. And I think that was such a key point for me was, you know, yeah, I'm a great idea guy. I love to create ideas, and my staff will tell you I'm throwing 100 of them, you know, at them on a daily and a weekly and a monthly basis. And yet I'm not always the one who's going to be the one to move it forward. And so you just got to figure out which lane are you going to stay in. And if that's not your strength, then go out and find somebody whose strength it is and allow them to go take that to the next level and across the finish line. So that was a big one because I look at that in many capacities in my own businesses. And, you know, if I'm having babies, just making sure that I'm either committed and willing to be the one to raise it, or I have an integrator or someone in my world that can take it across the finish line.
Who would you name as the most successful real estate investor or developer, and why would you consider them to be successful?
I've got a lot of different people in that space that I would name successful for different reasons. Like I look at, I had the chance of interviewing Stan Merrill of Fortune Builders. I know I'm sure a lot of individuals are familiar with him and his community and his courses and all the things that they've offered. Some people will say, you know, it's a scam. Other people have, you know, made hundreds of thousands and millions of dollars off of the stuff that they've taught. So I think it comes back to the individual. Why I respect Stan so much. He's created a community and an education platform that has given people the option, right? It is now an option for people to plug into his community and actually learn the content that enables other people to go out and be successful and invest in real estate. So I like Stan from the perspective of he's a great educator, and I think he means well. I look at, and he's obviously done a significant amount of real estate investing, being able to see behind the curtain of a lot of the stuff that him and his partners have done. Then I look at, you know, people locally in my own market. Buzz Oates is a billionaire, and he's somebody who has probably, if you're not in Sacramento or Northern California, you know, have no idea who he is. And he is the largest landowner and developer in Northern California, if not California and across the U.S. So he's been an influential person that I pay a lot of attention to. And then you got the people like the Kiyosakis, and, you know, David Osborne is one that has been a mentor and a friend of mine who is big in Texas. You got the Ruth brothers, who Todd and Clay Ruth were, I mean, really cool story. These guys are filthy rich, to say the least, and they've done it by just following one consistent model, which is triple net lease investments. Now they own, you know, they started with one commercial building. Now they have hundreds, and now they're invested in developing, you know, golf courses. So it's cool. I mean, everybody has a different model, and I would say is successful for their own specific reason, but you can always go back to each and every one of them and go, what was it that allowed you to create and build wealth? One, it's this foundation of real estate, but two, it was a particular niche that they decided to focus on and master before they branched out and started doing other things. So you got to figure out what your tree trunk is before you start trying to go, build and develop all the branches and leaves off of it. That was a long-winded answer to your question, but I look at individuals based on their niches instead of just, the wealth that they've accumulated.
Yeah, and that's a solid observation as well, is dig down, figure out what you're good at. I mean, I spent a couple of years in the beginning. It was, I want to do this wholesale deal. I want to do this, I want to build a new house. I want to flip a house. I want to do a rental. And I had like no focus and no direction in the very beginning. It was just like whatever came down the pike was whatever I was going to do that day. So yeah, building a tree trunk first before figuring out what other branches you may want to go to. Building that tree trunk will help you develop the perspective on the real estate business that you want, especially depending on where you're starting. Where I started from was not with a large amount of capital and a large amount of success behind me. So I had to develop 5, 6, 7 years for me personally to then have the perspective of, being able to analyze the risk and take a look at those other branches to see if, in fact, buying rental properties was all it was cracked up to be. Because when I did the numbers on some of the rentals I would have picked up over the years, I'd have been losing a ton of money. And so, I didn't build a 70, 80, 100 unit rental portfolio, even though I heard of guys that were doing it. It seemed like it would be heaven. But when I dig down deep into some of those portfolios that some of these friends of mine had, it was, a handful of vacancies and handful of turnovers, and they lost money. How did you possibly lose money on a 70 unit? You know what I mean? But,
yep.
So yeah, digging down is definitely critical, but that's for another conversation. Matt, 2 or 3 life-changing books, real estate, business, mindset, success, you name it.
One for me was Double Double by Cameron Herold. And why I love that book, it's a great book for essentially writing a business plan and just getting extremely clear on what your vision is for your company, for the employees, for the culture, for the space that you want to carve out. I mean, literally it goes down to the nitty-gritty of every detail that you could think of within a great business organization. So I really liked that book. That was a big one for me. I recently just finished Tony Robbins' Money Master the Game, which for anybody that wants to increase their income and their wealth, knowing what, some of the largest and most successful investors, hedge funds, corporations out there know. I mean, he pulls back the curtain on that, which I really enjoyed. I do a ton of reading in, the personal development space. I'm hot on Ryan Holiday right now, which I just finished his book, Ego is the Enemy. And, consistently just looking to improve my mindset, keep my mindset sound, because at the end of the day, I mean, that's what keeps me moving the needle forward is my mindset. Some days physically you may not feel the best, but mentally you can power through it. Some days you may run into a challenge or an obstacle, but mentally you're willing to keep, getting in the trenches, rolling up your sleeves and making it happen. So I always look at keeping my mind strong, and I'm big on just every morning I have a YouTube channel that I pop into, and it's got motivational videos, and I play one, 2 to 5 minute motivational video just to get my mind set on the right track. And that allows me to, approach and tackle the day with the right mentality as I move forward. So books, podcasts, and YouTube are kind of my go-tos for plugging into, more information.
Are you interested in sharing any of the podcast names or the YouTube channel that you pop into?
Yeah, for the podcast, I don't listen to a whole ton of other podcasts now, besides 2, really. One is Lewis Howe's School of Greatness, and I listen to Pat Flynn's Smart Passive Income podcast. And the main reason I listen to the 2 of them, one, they both have great content, but 2, I listen to their business format and their interview format and the questions that they ask, so I can consistently bring back and model some of that success and some of the things that I admire and how they structure and format their shows in my own show of the Millionaire Mindcast. So that's kind of my own selfish reasons of why I listen to the podcast, but I'm constantly picking up some gold nuggets. But for any of the, the daily, I would say, educational stuff, it's always going to come from Audible or picking up a book for me. And then for the YouTube, I don't have any like one specific channel. I just type in motivational videos or, some particular topic of the day that I'm interested in, and I'll go and see what comes up on there. TEDx Talks are also always a great way of getting some good, niche down knowledge in a particular space.
If you could go back, I think you said you're 28, so it'd be going back 10 years to share the crown jewel of wisdom with your 18-year-old self, what would that be, Matt?
For me, it would be, if I could narrow it down, I would start really with two things. One, don't give a shit what other people think. I cared way too much what other people thought when I was first starting out. I read a book called The Gift of Imperfections by Brene Brown, and that really was like a big self-acceptance, self-love book for me, which is not a common topic, especially for men, to, openly be transparent and share about their feelings and, X, Y, and Z. And when I got into this space of just going like, I am Matt and I'm proud of who I am and I know where I'm going. I know what type of individual I want to become. I know what kind of work that I'm willing to put in to become that person on a daily basis. And so when I actually stopped caring about what other people thought or felt or, specifically when it came to me, it allowed me to just get completely in alignment with who I really was. And that amplified who I really was instead of me doing things because I thought I had to act this way or dress that way or do this or that. So that was a big one for me, is just be yourself and own who you are. Turn up the volume on you instead of trying to dial it down all the time to fit in or to be who you think you need to be. When I was able to do that, that was a game changer for me. So I wish I would have done that a little bit sooner, but it was all in the right timing. And the other one is just to, go a mile deep and an inch wide instead of going a mile wide and an inch deep. And now, there is obviously some discovery that has to happen in order for people to understand what their passion is or where they want to, really go and deep dive into a particular space or topic or skill or whatever it may be. But when you figure out what that is, there's constantly always going to be distractions around us in the world. And it's easy to get, pulled in those directions. But if the most successful people that I've seen, they've gone a mile deep and an inch wide. And then when they've mastered that, particular skill or topic or space or whatever it may be, then they begin to branch out after they have leverage in place and they are able to keep that mastery running and then move on to the next thing. I look at it as like an overflowing cup. You're not going to go buy another cup until the other one on top is overflowing, and then you put the next one underneath it to start catching the overflow. So I don't want to have 6 cups that are, an eighth of the way full. I'd rather have, 1 cup that is completely full before I bring on the next cup. So just focus on that mastery and then move on to the next thing.
Matt, do you want to mention the podcast or any other websites if people want to reach out, get in touch with you? How should they go about that?
Yeah, so anybody can find me on Facebook, Matty, Aitchison, Matty. My last name is Aitchison. On Facebook, we're putting out a lot more YouTube stuff here in the next few months. We also have my real estate investing group, the Mastermind, which is going on all around the country. We have people that go through the 6-figure flipper course, which is to teach people how to create a 6-figure income flipping houses and to actually, set up a business that's sustainable to thrive and grow in any market moving forward. So we really have a community that's, teaching people how to fish in the real estate investing game for a lifetime. There's an amazing community that we have a virtual mastermind group that meets weekly and is obviously going back and forth in our Facebook group on a daily basis. And then my Millionaire Mindcast is just a passion project of mine to, deliver conversations, motivation, inspiration to help people increase their income, impact, and influence in whatever space it is. So that's on iTunes and Stitcher and all the other normal platforms. So I appreciate you asking.
Well, Matt, we've come to the conclusion here. I really appreciate you coming on the show. It's been great. I got a couple pages of notes here, and I'm sure the listeners do too.
I appreciate it, man. It was been a pleasure connecting with you and your community, and I'll look forward to connecting with anybody that wants to reach out privately.
Thank you for listening to this episode of the REI Diamond Show. Are you interested in receiving email notifications of future episodes of the REI Diamond Show as they become available? You can either sign up at www.reidiamonds.com or subscribe through one of the podcast apps, including iTunes, Google Play, and Stitcher. Are you interested in checking out deals/contracts we have for sale in one of the markets we operate, or possibly presenting a deal or contract or listing that you have for sale that I might be able to buy from you? Either way, you can submit deals you'd like to sell or check out the deals I have for sale in Chicago, Atlanta, Florida, or Philadelphia. We are currently about to add a couple more markets, so keep an eye on that by going to www.reidiamonds.com and clicking the link at the top of the page. Finally, if you have certain questions or topics you'd like discussed on a future episode, or if you have a guest suggestion, somebody that you'd like me to invite on the show, you may contact me directly by clicking the Contact Dan link at www.reidiamonds.com. There's also some cool bonuses there, along with 77 other previous episodes with some knockout guests. If you have not checked those out, you want to go to www.reidiamonds.com. Thank you again for being a loyal listener of the show. I appreciate you. Dan Breslin here, and I'll catch you on the next episode.
Thank you for listening to this episode of the REI Diamonds Show with Dan Breslin. To receive email notifications of new weekly episodes, sign up at www.reidiamonds.com.